Good evening, guys. Today we'll be talking about money burners and money savers. That is how to not burn through your capital and how to save money in trading. Okay, we'll do this PDF together like as usual, like the other PDFs. What are money burners? Money burners are things that burn through our accounts. What are money savers? Money savers are things that save money for our accounts. Okay, so we'll start with the money burners and we'll list them as we go. So the first money burner that I spotted when I was looking at my account was that I was not risking correctly. I was not using risk management correctly. Now what I would do is, if I'm risking 5% per trade, right, and I end up taking another entry and I lose it, and end up taking a re-entry, what would happen is that I'd have to risk another 5% again. So instead, what you want to do is you want to calculate how many trades are actually going to go into this trade idea, to a single trade idea, before you even enter the market. So you'll calculate how many trades you'll take, right? And then you'll divide it by your risk percentage, which is by 5%, right? Right, and you divide by your risk, which is 5% in this case, right? So that it totals up all your risk should always total 5%. This is the first money burner, right? Is that we tend to not use risk management correctly. If our trade risk is 5%, we tend to risk that, and then I end up wanting to enter again, and then I end up with, for instance, a 15% drawdown or a 20% drawdown, or if you are greedy, you end up with a 50% drawdown. By simply doing this, you take 4 trades back to back to back, and they end up losing you about like 20% instead of dividing the 5% and maybe risking 1.5% or 1.25%, I mean, per trade, and you still risk the 5% but still take your 4 trades. So calculate how many trades that will go into one trade idea, right? And you should always, so that you always risk 5%, right? So that's the first lesson. Calculate how many trades go into one trade idea, so that your risk should always total 5%, right? That's risk management. The second one, and yeah, this was the longest. The other ones should be shorter, by the way. The second one would be with PD arrays. This is a great one for people who still stuck with PD arrays. Usually after PD arrays hit, you want to enter, but you should not enter on the first hit of PD array. Do not enter when price reaches PD array. You want to use this, right, as sort of like a mechanism where you can see that the other traders go entering, and then you want to enter on the following. There's going to be a stop hunt, right, after price reaches your PD array. So you do not want to enter before the stop hunt. So every time price reaches a PD array, you want to stop and wait for the stop hunt. This is a huge money burner if you're trading ICT methods. This should be a great one. So do not enter when price reaches PD array. You want to stop and wait for the stop hunt, right? Then you enter. These are great rules. These are rules that I use. These are rules that I use basically to fix my own trading. So everything I put here is basically what I use that worked for me. So I don't have this is not advice that you'll get anywhere else besides here, because it's personal. Okay, so another thing that I noticed uh, is that, okay, this is part of money savers. Let's go to money savers. Another thing that I noticed that saves money is having a winner's mentality every week. Right, so tell yourself mentally that you're gonna win. Envision your trades and make sure that you know you're doing the work and you're motivating yourself. So having a winner's mentality first, that's a huge money saver. That will save you a lot of money and time, right? And then another money saver is always put your stop loss 10 pips of a high. This is also a money burner, by the way, because if price after, let's say, it reaches PDA rate, turns back, stop hunts we enter, right, it might do an extended stop hunt. So when it does that, you want to make sure that your stop loss is far enough so that it doesn't get swept by prematurely, even if the market is not turning. So this is why we do this. It's a huge money saver and money burn at the same time, right? So another money burner is, I wrote, being blindsided emotionally, right, to trade. So what happens when price reaches PD array? What's next? You want to enter, right? You sort of like blindsided by the market, when by your emotions, by greed, and you end up entering the market at a place where you shouldn't have entered. And every time you do a review by the end of the week, you see, shucks, this is where I should have entered. I should have waited, right? That's because you were blindsided by the market, by greed, right? How do you spot when you're blindsided, right? It's by basically the urge to trade, right? So being blindsided to trade prematurely is what we'll write, right? The sudden urge to trade, this is how you spot it. You know, and you know that it's not the right place. So watch out for that too. And what I also noticed is that's a huge money burner. The application, I used to seem not to I used to not follow my rules properly, right? So now another thing, that's another money burner that you should look out for. Save yourself time and stick to the rules. Train yourself to stick to the rules. You see, these are the money burners for the strategy that I've been implementing, ICT strategy, my money burners and my money savers, that helped me. So I'm just posting it just in case it would help anyone else. Otherwise, yeah, that's it. That's the intention of these videos, by the way. I saw that I gained 1 subscriber, so I thought I should make another video. So yeah, cheers, until next time, guys.